Good afternoon, everyone. Thank you for joining me for another video. It's your host, Crypto Glenn. You could have been anywhere in the world, but you decided to be here with me, and I appreciate that. Nearly $100 billion worth of deposits pulled from banks. Officials call the system sound and resilient. Now, listen, if you guys have been following me across any of my social media platforms, be it TikTok, Twitter, here on YouTube, you know that the recent hikes have been giving me, as well as others, for a decent pause for concern. And the reason why I say that in short is just I don't think the worst of what these banks are going through is over. Ideally, a lot of money has been spent to ward off negative effects from these bank runs. And I think as Jerome Powell has continued to raise interest rates, we could potentially see more bank start to have issues here in the very near future. Because essentially, if you're not aware, let me give you the short version. Every time we raise the federal funds rate, essentially that has a negative effect on bond markets. And so these banks, they're taking these deposits and for the most part, they're doing as they should. Take the deposits, invest them into a safe asset that's going to provide you with some yield. And historically speaking, this has been the play that most have ran, and it's yielded decent results. The problem is now with the rates being hiked up as fast as they are, we're essentially nuking the bond market. At least that's what Jerome Powell's doing. So I wouldn't be surprised if larger banks started to now have an issue with the bonds not being worth what they once were. And this is going to be cause a problem because if you've been paying attention with Yellen, if you've been paying attention to what Powell has been saying, essentially they want to make it seem like everybody's going to be made whole. Not sure if any later point in time they're going to make any banks that start to have an issue with deposits, if they're going to make them whole again beyond the 250,000 FDIC insured amount. When I listen to some of these press conferences that have been taking place over the last week or so, the feeling that I get is if you're a more localized regional bank and you're not politically connected, help may not be coming for you. And so I think that's a plausible reason for anyone who has concerns to, in fact, have concerns. Kind of taking this information here and just trading with it what you will. Was able to go into the markets today and pull off over 20% ROI in just about 10 hours. This is a snapshot of a trade I let ride as I was sleeping. Used about 10 or so X leverage on this. Nothing crazy. And yeah, I mean, listen, the yields, they were pretty good. 20%. I think that outdoes what most index funds are going to get you in the traditional market. So I'm happy about that. And what I want to at least take a look at here today moving forward is potentially what's the price of Bitcoin going to do here this evening as the weekly candle closes. If you're taking a look here, this chart now, Bitcoin on the 4 hour, you know, that value area is right there in the middle of the VPVR. And really, if you're using this indicator, that's what you want to see. You know, we're not beneath value. We're not over. We really want to be. But however, we have this doji candle here that is sitting, and this candle closes in about 43 minutes. If we go on to the daily, you kind of see it's a little bit more of the same old. Bitcoin had a little bit of rejection from the 28,200 area. This is going to be our next level of resistance. If we get beyond this, I would say the next area that we can look to see Bitcoin hit is going to be somewhere around 30, possibly even 31,000, right? We've got a nice area of liquidity here just before you get to 30,000. I'm assuming market makers would probably like to try and take that out. Am I still bearish? I think macro 30,000 feet out. Yes, I am still bearish. I think the rates being risen poses an issue for risk on investments. I'm not, again, someone who believes that these things are already baked into the price. And I know that because we are in fact having this rally on the weekend, there is a very, very strong chance that come Monday or come Tuesday, we could actually see a very different scenario play out. I mean, after all, if we're looking at this, it's a bit smaller. You see here, as price was pumping up, the volume in itself was going down. That's on the 4 hour. We see the same thing happening on the daily. As the price was going up, the volume was tapering down. And that just leads me to believe that, hey, you know what? We could potentially see the price of Bitcoin maybe fall out of this symmetrical triangle. I will say this, though. Whenever you have this sideways consolidation, normally this is a continuation pattern that you'll see break out. That's why in this symmetrical triangle, I'm rooting for it to actually break out to the upside. And as you can see here, the move that preceded Bitcoin entering into the symmetrical triangle, at least on the 4 hour anyway, I'm going candle body to candle body. It was an upward move. So right now we're just kind of going sideways, facing a little bit of resistance off that 28,000. But if in fact Bitcoin does break through, we could potentially see 30, maybe even 31,000. I mean, like I said, there's just not a whole lot of things that are going on in the crypto space right now. If you're paying attention, Do Kwon was arrested in Montenegro. Credit Suisse is still having issues. First Republic Bank is still having issues. Every day that stock's like a yo-yo. It's up and down, it's up and down, it's up and down, even though regulators have stepped in to actually try to ward off further hemorrhaging. They're still having issues. Now, I will say this. If, in fact, you want to do some reading here this Sunday evening, definitely take a look at what's going on with Deutsche Bank. Deutsche Bank is one of the larger banks that has at least, I believe, over $1 trillion worth of assets, and now their stock price is actually starting to slide too. And this was the news coming out of Friday. And again, I think you're going to start to see more banks have this issue. If, in fact, the Federal Reserve continuously raises rates, you're going to nuke the safest asset. The majority of banks have decided to put deposits to try to earn yield, and you could potentially see more banks start to have liquidity issues and bank runs happen, and regulators have to step in and save the banks yet again. Personally, I don't think the Fed needed to raise rates. I think if they were going to do it, they probably should have did it by 50 basis points. But given all of the trouble that's been happening with banks in these bond markets, I think ideally what they should have done is just paused and just waited to see how things were going to shake out. That's the news for today. Feel free to tune in to the next video on Monday, where we'll take a look and see what the markets are doing.